Welcome friends, in this video we will look at whether XRP coin becomes $3. Don't forget to subscribe, don't forget to like, and please watch to the end to understand. First of all, we observed that the price has been moving inside the downtrend and is now moving away from it. This downtrend represents a prolonged period of weakness in the market and sellers dominating, so the price has been moving steadily downwards. But the fact that the price is starting to move away from this downtrend is really something to watch out for. This could indicate that the market is about to turn and buyers are gaining strength. If the price starts to break out of the downtrend after a certain level, it could be a sign that buyers are entering the market more strongly and the price is starting to move higher. Such situations usually indicate a trend reversal, because when the downtrend ends and the price starts to rise, it signals that buyers are gaining dominance and optimism is returning to the market. For traders, this can be a very positive signal. A trend break offers potential earning opportunities for traders. In particular, a new bullish move following a trend break could lead buyers to gain more confidence and invest more in the market. This could be a great opportunity for not only short-term, but also long-term gains. It is important that a trend break is carefully monitored by traders. If the price completely breaks the downtrend and consolidates this break with a sustained upward movement, market optimism increases and the price may reach higher levels. This would be a strong signal for both technical analysis and market sentiment. Investors can also take advantage of such opportunities and strengthen their positions. Here, the price needs to break this downtrend to go up to $3. But we can't be sure with just trends. Let's look at other metrics together. Delving deeper into the Elliott wave theory, we observe that currently, the market has completed the first wave and is moving towards the second wave at this stage. This process represents the early stages of market movement and forms the fundamental dynamics of the overall price action. The first wave is usually a strong initial move, and then the market initiates the second wave with the aim of correction. The second wave is very important in Elliott wave theory because it usually refers to a correction following the initial rise. Here, the price pulls back at certain levels, creating a kind of equilibrium. This allows the price to lay a solid foundation for the start of a bigger rise. However, the second wave is usually corrective in nature and retraces some of the previous move. Therefore, it is important for traders to be careful during this period and to correctly identify the market's retracement levels. Fibonacci levels give us very strong signals about the points at which these corrections will be completed. The Fibonacci sequence is a natural sequence and is used in financial markets to predict the levels to which price movements may retrace. In particular, the 0,618 and 0,786 Fibonacci levels are close to the lows of the second wave, and major reversals can be observed at these levels. These correction levels are determined by measuring the Fibonacci levels from the end of the first wave. At the moment, the price is very close to these levels, and when it reaches them, the probability of a major reversal increases. This represents a signal that the price tends to reverse the strong moves experienced earlier. This reversal allows the market to take a new direction, setting the stage for the start of the third wave. If the price approaches the Fibonacci levels of 0,618 and 0,786 and gets a strong reaction there, it would signal that the market is ready for a bigger move higher. This is because these levels have historically been the points where market corrections end and a new uptrend begins. In this case, for traders, positions taken at these levels can create great opportunities for long-term gains. When the third wave begins, there is usually strong momentum and a rapid rise. Therefore, a price reversal from these levels can be considered a strong buy signal. In the next phase, the third wave movement is likely to be the strongest in the market. This wave usually generates a lot of excitement among market participants and represents a period of rapidly increasing momentum. The third wave can sometimes be the longest and create significant profit opportunities for traders. The target of this wave is usually located slightly higher than the first uptrend, and Fibonacci levels can help in predicting these points. Here, we should patiently wait for the end of the second wave, because the third wave will be nice. The head and shoulders reversal pattern is a structure that plays an important role in technical analysis and often signals a strong trend reversal. This pattern is formed after a downtrend, signaling the start of a market rebound or bullish movement. Basically, it is characterized by the development of price movements in a shoulder-head-shoulder pattern, which indicates that the previous selling pressure of market participants is now weakening and buyers are beginning to dominate. This pattern usually forms a bottom, after which the price goes through a recovery process, during which the head appears. After forming the head, a second shoulder part develops, indicating that buyers are regaining their strength in the market, and the uptrend is ready to begin. In the current situation, the price action is busy making the last shoulder. This is the final stage of the inverse shoulder-head-shoulder pattern and indicates that the completion of the pattern is nearing. When the pattern reaches this stage, it is an important sign that the downtrend in the market has ended and the uptrend has started. With the completion of the last shoulder, the price is expected to start rising, with the possibility of a rise to the depth of the head zone, which is the target of the pattern. This target usually presents a great opportunity for traders who are looking for trading opportunities in the market. The price is expected to increase by the depth of the head zone after the completion of the head and shoulders reversal pattern. This is the target price level obtained by calculating the distance from the bottom of the head to the top of the shoulders. A move to the depth of the head usually means that the market will move strongly to the upside, creating a lucrative opportunity for traders. As the pattern is completed, buyers gain more confidence in the market, and this confidence helps push prices higher. The completion of an inverse head and shoulders pattern creates a strong buy signal for market participants. Such patterns often provide safe buying opportunities for long-term traders. This is because the completion of a pattern provides a strong basis for buyers to take control and prices to start moving upwards. Traders can anticipate that the price will rise after the completion of such a pattern and take advantage of this opportunity. With the completion of this pattern, the price is expected to reach the targeted levels. A rise to the depth of the head zone can be a significant move for the market and represents a very lucrative opportunity for traders. The head and shoulders reversal pattern is considered a reliable sign in technical analysis. When this pattern is completed, it is quite likely that the price will start to rise and traders will benefit from this rise, and is ready to go to the target once it breaks the neck zone. The vortex indicator is a powerful tool used to determine the trend strength and direction of the market. This indicator consists of two lines, blue and red lines. The blue line represents the strength of buyers, and the red line represents the strength of sellers. On the vortex indicator, when the blue line is on top, this indicates that the market is in an uptrend and buyers are more dominant in the market. Conversely, when the red line is on top, it indicates that the market is bearish and sellers are strong. In the current situation, the vortex indicator has the red line at the top. This indicates that bearish pressure is still prevailing, and sellers are in a stronger position than buyers. The supremacy of the red line increases the probability that prices will continue to move downwards. This is an important warning that the market is in a downtrend in the short term, and traders should be cautious. However, it is important not to lose a positive outlook here, because the vortex indicator gives signals that can change the direction of the market. If the blue line starts crossing the red line, this indicates that the strength of the buyers is increasing, and there might be an opportunity for the uptrend to begin. This means that the current decline may only be a transitional phase, and the market may change direction after a while. If prices start to recover and the blue line on the vortex indicator starts to cross above it, it indicates that the bullish transition will be strong. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.